many of you know, I actually like business interruption insurance. When I discuss BI with fellow enthusiasts, one of the few things we all agree on is that the maximum indemnity period of 12 months is invariably too short. But why is it too short? Well, we are going to explore this in this podcast and look at some of the reasons. You are listening to a Sitting with Sue Insurance Questions Answered podcast, and I'm delighted to have sitting with me today Rob Ford from Sedgwick. Rob is one of their business interruption specialists based in their Birmingham office, and he has produced a really good one-page document on the subject, which should be appearing on your screens now if you're watching this on YouTube, but it's no problem at all if you're not, as we will talk you through it. So firstly, Rob, can you tell us a bit about yourself and your career?
Certainly can, Sue. I started at adjusting in 2011, around 10 years in accountancy practice. I moved to what was Vericlaim in 2013 to work with the wonderful Damien, and sort of been here ever since, aside from a short departure for 5 months in around 2017. So I'm a chartered accountant and chartered loss adjuster. I have 2 sons who keep me busy as well, aside from the work. And I seem to have developed a keen interest in doing long runs and bike rides. Recently rode coast to coast in Ireland, which was around 210 miles. So seem to put myself through the world of pain as well outside of work as well.
So Rob, turning to the subject matter in hand,
Yep.
You have broken your diagram down into 4 sections. Firstly, immediately post-incident.
Yeah.
Secondly, before the reinstatement work can start. Thirdly, during reinstatement. And then fourthly, post-reinstatement. There is then the added perspective of looking at it from what is beyond the policyholder's control and then what is within the policyholder's control. The first section is immediately post-incident. But Rob, what are the main points you want to make, and what sort of timescales might be involved in each stage, and what is beyond the policyholder's control and what is within it?
So I think that the first thing we need to point out is that the outside of the policyholder control is far greater than the within policyholder's control. And this can make any loss particularly difficult because there are certain aspects that they might not be aware of, that might not have happened yet, that can seriously impact the period that the business is affected for. So the first 3 stages are there to sort of show how the reinstatement or pre-reinstatement periods can impact on the business and its ability to trade, whether that's partially, fully, or not at all. And then obviously we have that post-reinstatement period. So what we're not looking to do here is to run through each individual item. I think we'd be here all day if tried to do that. But we will look at a select few areas as we run through. So if we look at the immediate post-incident, there can be a number of things. So emotions after a fire or flood can run extremely high. You may have staff who are concerned. What if this is going to impact on my job? How are we going to progress through this? People's reactions to a loss can be very different, but it does heighten the stress and it does bring fear for staff during that period. Financially, in the immediate aftermath, depending on the type of business, some businesses run on cash flow coming immediately from sales. Some businesses may be on 30 to 60 day payment terms, and they may not necessarily see the immediate cash flow impact, albeit there might be costs that they are incurring. But we also see certain businesses that literally they get cash flow, the money is in as soon as they make that sale, and a fire or flood that stops them from trading can have an immediate impact on that cash flow. This may also, in turn, bring pressures from the banks or financiers who might be aware that that money is not coming in, who then might have concerns about how they fund the debts of the business. So this can lead to heightened stress. And we may require things such as forensic scientists to look at cause, and this may have impact on the timing of the cover and even the timing of a liability decision. So what we may see is at this early stage, if a business has a business continuity plan, this is an opportunity to start to implement it. As I said, if they are in existence, the staff, the directors or the senior management of the business will want to reassure staff this is what is going on and this is what we are looking to do. But that may take a little bit of time to come into fruition. And also the critical thing here is communicate with stakeholders. Let them know what's going on because they may have concerns about what is going to happen with the business. So we want some positive communication going out to all those stakeholders involved.
Some really, really good points there. But then we obviously have to move on to the second stage. And those are the considerations before reinstatement work can actually start. So again, what is outside the policyholder's control and what is inside it?
So I think what we just need to look at is the first two stages do highlight that reinstatement doesn't start immediately. And that's something that people need to be aware of. As we sort of show here, the preparation stage can be up to 9 months, as we've shown on the diagram. It may be longer depending on the circumstances. So that is something just to be very mindful of. One of the biggest difficulties we see in adjusting is the landlord-tenant scenario. So quite often we are dealing with business interruption claims for a tenant, and where there is a fire, flood, damage to the building, it is generally the responsibility to reinstate rests with the landlord. This means that this is out of control of that tenant, of the policyholder, and this can lead to extended periods before actually reinstatement starts. They may look to go down a tender process, which might not actually be in the benefit of the tenant. So this can have quite a significant financial impact, and particularly that the gross profit or revenue exposures for that tenant probably exceed the rental exposures for the landlord. So this can have a significant impact on a BI claim and certainly a loss to a policyholder, and why we do talk about these long maximum indemnity periods. Again, not looking at everything on this list, but another key item is listed status and planning. So listed status means there may be the requirement for conservation specialists and the like. There may have to be strict agreement as to how a building is going to be reinstated. There may very much be restrictions on that. And this, again, can take time. Likewise, we are seeing more environmental planning issues, and some of these can be local, but again, these are having serious impacts on the time it takes before reinstatement can even commence. So again, these are things that need to be minded. What is the building we are dealing with here? Or even what is the plant? How easy is it to get hold of? All things that need to be considered as we move forwards. So within control here, we always look at close liaison, make sure you're keeping in touch with the insurers, brokers, and loss adjusters, and so that we're avoiding any surprises with a loss. We don't want to see something crop up out of nothing. Everyone should be communicating well, and that any issues are brought out at an early stage. Also understand cover. We can make interim payments, particularly as we mentioned previously, cash flow might be an immediate issue, that once we have a position on liability, we can be recommending interim payments, and also looking at is the adequacy of the sums insured. So it is helpful to understand cover here. Cash flow support is available via interim payments, but we also need to understand the adequacy of the sums insured and how that may impact on settlement down the line. And that should be communicated early so that people understand where there might be any implications, if there are any. Also, mitigation plan. Is there anything that can be done to try and expedite the buildings or allow the business to trade in any way, shape or form, whether that's subcontract, whether that's relocation of the business temporarily, such and such. There's no definitive list of what increased costs can be, but these are just some thoughts of areas where consideration may be given.
Now, we've obviously gotten through a considerable number of points to get through stage 1 and stage 2. And we're now moving on to the third one, which is during reinstatement. And here in the diagram, and I would really, really stress that it should be emphasized that you don't just base the maximum indemnity period on this bit, the during reinstatement, because consider all of those points that you've already made, and there are a considerable number, and those are not within the reinstatement period. So Again, now looking at your third point, which is that during the reinstatement period, what are the topics again inside and outside the policyholder's control? And why do you need to be so cautious when setting that maximum indemnity period?
As you've already alluded to there, we often see a maximum indemnity period set solely on this period. What that actually sort of ignores the position that we have this pre-reinstatement and also any recovery thereafter, which can seriously harm how the policy responds and what policyholder may get back as a result of a claim. So this is quite an area where we have seen some quite significant impacts. And we have the great example of someone parking a ship in the middle of the Suez Canal that no one actually ever thought would ever happen. And we absolutely saw increases to indemnity periods and increases to losses because of that. So we had equipment, materials, machinery sat on ships that were just stuck behind. So these are things that you can't foresee, but they are things that happen. And these can have a significant impact on a loss. Likewise, as again, another maritime one was the Baltimore Bridge strike. And that's ultimately impacted on ships being able to get in and out of the port there. What we often find, though, is this is where we get the optimism. People are optimistic about how quickly we can reinstate something. And whilst optimism isn't a bad thing, what we need to think about, particularly when setting a maximum indemnity period, is the total loss scenario, because it can take time to put something right. Weather can absolutely play a big impact on how long something takes. If you're trying to reinstate during the winter, we may have big storms, albeit we may have big storms during the summer nowadays. So again, these are things that can really impact. Likewise, there may be unforeseen damage that doesn't become clear until we start that reinstatement. And this does happen time and time and time again. And that in itself can bring significant delays. So these are all things that sit outside of the control because you just don't know. And until they happen, we don't know necessarily the impact. In terms of within control, so aside from within control, consideration can be given to how we could expedite that building repair. Is there a way we can pay money to try and get this done quicker, out of hours working, maybe setting a deadline and with bonuses linked to it? So the BI policy can respond to things that may be able to expedite our reinstatement period via the increased cost of working. Likewise, if we are managing to work and staff might have to be working through conditions that aren't ideal, let's put it that way, or they're having to travel a bit more or things like this, is staff incentivization. We want to be trying to keep those members of staff and help us mitigate. And if it means we can, we are generating turnover, then this has got to be a positive. So that's sort of where we look during this reinstatement. There's a number of things that can extend that you don't know that's going to happen when a loss happens. So as you can sort of see, that this beyond control is quite critical to setting a maximum indemnity period.
It's also called Murphy's Law. So we are now at the stage where the property damage is complete. So if you like, it's restored or the last brick is in place. So it's post-reinstatement of the physical aspects. But interruption to the business is still very likely to be going on. But what might that actually look like once you've got that last brick in place?
So what we can see is in general, and I have seen businesses that do have recovered immediately, but they are few and far between, I would say. I would say in the main, we see businesses and there is a slow recovery of turnover. So the business can trade as normal. That's not to say that turnover returns. Turnover can take a significant period of time. If we take, for instance, a shop, if it's not been able to trade at all in any way, shape or form, its customers may have changed behaviors. They may have gone to a competitor, and it's difficult then to try and wrestle them back at the end of the day. So that can mean that it takes a long time for those customers to return, or we need to try and win some new customers from somewhere because we've got a problem with getting this turnover back. Likewise, we've seen businesses that have gone from sole supplier to multiple supplier. So where the customers sort of realise they've got all eggs in one basket because they've suffered a fire and it's caused massive impact. This quite often doesn't always get seen immediately. This can take a little bit of time depending on the type of business and whether approvals are required and so on. So any shortfall may not be seen immediately, but it's something to very much bear in mind. And another big area is a loss of key staff. If you have a business that cannot trade and it's going to be out of trade for a long period, staff might be fine for a couple of weeks, but then the boredom factor kicks in. People do sort of sit there and think, oh, actually, I want to do something. They will either go out, find a new job, or there is risk of them being headhunted because they're sat there doing nothing. There is opportunities for them elsewhere. And it's then quite difficult to replace these people, particularly if there's a particular skill to them and there's a shortfall in that market. But within control, we can consider things like mitigation measures, whether there's ways to keep customers, retrospective rebates and the like. Likewise, advertising, whether that is digital or the traditional press sort of area or leaflet drops or the like. There are ways in which the policy can respond to this, as long as we've got maximum indemnity period left. And this, again, why we talk about these long maximum indemnity periods, because it's not just there for the reinstatement and pre-reinstatement, it is there for post-reinstatement as well. It's there to get the business back to where it should have been. And that's why, we want to see these long maximum indemnity periods, because it's all benefit for everybody at the end of the day.
So I think you've gone through an awful lot of points to suggest that 12 months really isn't long enough. But in summary, and I will try to summarise, I'll just try to get the key points I think we've covered today. So immediately post-loss, the pressure will be enormous from a people perspective. And then also trying to deal with the insurance aspects as well. They have to be working out what to do next and also thinking of those aspects. You cannot ignore the pure shock that the policyholder and also those involved will actually potentially be suffering. You've then got the fact that before reinstatement can start, there is a long list of things to do. And it's like a huge, great long tick box list. And that has to take place before you can actually enable the reinstatement process to begin. During reinstatement, the policyholder is exposed to a whole series of things that are outside of their control, such as weather and supply chains, or simply plan A isn't working. Post-reinstatement, the policyholder might not have the same employee or customer base, so out of sight, out of mind is very much the case. Now, maths is not my best subject by a long stretch of the imagination. But if it is right, therefore, you're looking at a minimum of 24 months in most instances, and it could be considerably longer. It could be 36 or even 48 months. The key, really and truly, in my mind, is to create a business continuity plan and build in some buffer zones, because things rarely ever go according to that plan. So Rob, just before you go, and you've been absolutely fantastic today going through all these points, is there a question I haven't asked you that you wish I had?
Well, I think what we're looking for here, Sue, is to try and make the loss experience better for all stakeholders. The starting point for any loss, whether it's fire, flood, etc., is the cover. So in this instance, we're looking at the business interruption cover and specifically the maximum indemnity period. But the idea is to look at the better the cover, the better the experience. We've all seen sort of the 12 months maximum indemnity period losses, and you can reach that 12 months with barely anything occurring, particularly as we sort of look back to the planning issues and the listed status and things like that. So that can leave the insured exposed to significant uninsured losses, which can only be a bad thing. So the intention of this document and this video and podcast is that we want to look at the phases of the loss to provide an understanding that look at why long maximum indemnity periods are useful, if not a necessity, when taking BI cover. We often sort of see within the industry, we look at sort of the videos that tell us what happens after the loss has occurred, but actually the cover sort of happens before the loss, and where we need to be getting, if we're getting things right, if the cover's right, it certainly drives the experience that the policyholder, adjusters, brokers, everybody has, all stakeholders has during a loss. So, as far as we're concerned, these long maximum indemnity periods are critical for policyholders. I would add, if anyone does want a copy of the document, please feel free to email me at robert.ford@uk.sedgwick.com, and I will happily send you a copy.
Excellent. Well, once again, thank you, Rob. We hope we've answered some of your questions in the course of this podcast. You have been listening to a Sitting with Sue Insurance Questioned podcast, and for my other podcasts, please go to my website at www.suetaylor.co.uk. Bye-bye.